Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. And we want to talk today to Uranium Energy Corporation, of course, with Amir Adnani, the CEO of the company. Uranium is hot. Uranium broke out. Amir, good morning to Vancouver. How are you doing? You must be super happy because we kept telling this years by years, right?
Well, Jochen, it's a pleasure to connect with you. As you know, I've been in the uranium business, building uranium energy for 16 years now, approaching 17 years. We've been relentless in our view and commitment to what we felt were long-term fundamentals for the sector that would ultimately show themselves and manifest themselves in a higher uranium price. And that breakout that you just alluded to is starting to really take shape here, and it's just fascinating, and it's an exciting time.
Absolutely. Yeah, and it is something what we were talking about, really the last 3-4 years, and a lot of people laughed at us. And I remember 2016, we brought out our first uranium special report, and I think you were also part of that. And, people hated us in Stuttgart at the fair and said, Jesus Christ, how can you write about uranium? That's unbelievable. But I think uranium is the key to reduce GHG emissions on the one hand, and is the key for e-mobility to me, because we need the base load. We need nuclear power plants that things are really moving and can really work in the future. Because if we produce power with coal and gas and oil, it makes absolutely no sense. So uranium is a key. Uranium is the key to me, and uranium energy, I think you were the real trendsetter because you started to buy months ago physical uranium as a company. And I know a lot of people started to shake their heads and thought, like, what's Amir doing now? But you were perfectly in the market.
For sure, we saw this unique opportunity earlier this year, which was the spot uranium price in the high 20s per pound. And we looked at what the global all-in mining cost of uranium is, and it's going to be, which is going to go higher because of inflation, because of everything happening in the world with economic structures right now. And we just looked at uranium in the high 20s, low 30s, and just thought, you know what, this is enough. Enough is enough. We're going to buy physical uranium. And we did, and our company was the very first to come out, and basically what we launched and what we called our physical initiative. And our physical initiative quickly emerged into a physical program because we contracted for over 2 million pounds of uranium. And our view was really to hold the uranium on U.S. soil. So we wanted U.S. warehoused uranium. We're a U.S. company, and we're going to have U.S. production, and we're looking at U.S. utilities, which are the largest customers of uranium in the world, as our main market. And we also felt that, you know what, cash is good to have, but we want to keep some of our cash in physical uranium. So we really felt buying physical uranium was going to strengthen our balance sheet. And look, it has. We started buying uranium at $27 per pound earlier this year. Yesterday, as your audience know, and not to be putting a date on this interview and then the price changes, but as of the recording of this interview, price of uranium is $48 per pound. So we're up $20 per pound on physical uranium that we entered into contracts for deliveries immediately and out over 2 years, which was part of the way we thought about it too, which was, you know what, we like this physical uranium price, and we don't want all of our cash to go out the door on day one, and we want our company to stay cash strong. So we even approached some of the sellers and we said, we'll fix the price and the delivery date with you in the future, and we'd like you to deliver uranium to us in the future. And Jochen, this is what the utilities should be doing. Now, the utilities are going to, of course, have to do this at a higher uranium price. But look, ultimately, we have an environment right now where the miners of uranium have been buying the thing that they mine. The suppliers are buying the supply. It's crazy. I know you have the financial players enter in a big way with the entry of this Sprott Physical Uranium Trust, and really, I think we have to step back. And I want to go back to the point you made earlier. I mean, we being you and I've done this with you before, where we go throughout Europe and try to tell the nuclear energy story. and why the nuclear energy story had a bright future. And people didn't want to meet us. The nuclear energy was hated. It was a difficult sell. Nonetheless, the points that we made, e-mobility, clean air, the idea that nuclear power is emission-free, not the idea, but the characteristic of nuclear energy being emission-free. We kept saying all these things matter in the long-term energy plan. And look at what has happened here just in the last 6 months. In the last 6 months, we have this acceptance, this concept has now totally settled in everyone's mind, which is if we want to go net zero with carbon emissions, if we want to reduce global temperatures, which we must, it's not even a debate, we must do that, then we must have nuclear energy in the energy mix right alongside renewables. Renewables on their own can't carry the weight. You need nuclear right next to them. And then people say, oh yes, e-mobility, the electrification of transportation. And you and I are probably thinking, yes, we told you, we talked about this all along. And so, yes, the uranium price is moving, but it is moving based on fundamentals that have taken almost a decade to take place and shape, both from a supply-demand point of view for the market itself, where we consume way more uranium than we produce because all the mines, most mines have been shut down. All the mines in the U.S. at least were shut down. There's no uranium mining in the U.S.
What's the gap this year? Is it like 60 million pounds or something, right?
Demand is just under 50 million pounds in the U.S. market alone. Uranium production is zero. That is not sustainable. I mean, that's just a crazy situation the market has found itself in. And now we have a supply crisis. And yes, there was an oversupply of uranium for a decade, but that oversupply wasn't limitless. We've drawn down those inventories that were available. Now we find ourselves in this position where demand is going up because, again, of decarbonization being a really important driver for why nuclear power plants are needed. Their lives are going to be extended, the existing ones, and new ones are going to be built. Over 50 reactors are under construction right now around the world. But the issue that has been taking place for years is that mines were not economic at $20 uranium, at 25, at 30, not even 35. $50 is the incentive price to start to see some activity. And so we had a decade of underinvestment, and the supply of uranium really would need to double from current levels to keep up with where demand is going. And guess what? You can't just flick a switch and have uranium demand double. It takes time to permit. It takes time to ramp up. And we happen to be in the hottest labor market or the tightest labor market of all time in the world. And so the uranium miners are going to have, I think, they need time, and it's going to take a long time to really see mines develop and ramp up. That means the higher uranium prices that we're going to witness here, in my opinion, will remain high and elevated for a long time, because that's the only way we're going to incentivize new mines to come online. It's either that or the lights go out, right? As we famously always talk about, right? And I don't think the lights are going out. We need more and more electricity. This planet is thirsty for more electricity. We just can't get enough of it. Our cars are going electric. Right now, I'm sitting in front of you. I got lights on. I got this laptop on. If it goes off, I can't communicate to you. We need electricity.
Yeah, definitely. So that means we need more uranium. We have also a lot of new nuclear power plants which have been constructed already, but also over 50 are still under construction. And as far as I know, if we go to 2040 outwards, another whatever 50 to 70 are in the planning with China, with Saudi Arabia, all those kind of things. But coming to your terrific company, and I'm a shareholder of your company, long-term shareholder, thank God. What is going on with Hobson? Because you have really a production facility you could restart quite soon, or quite fast, not quite soon, really fast on the one hand. But on the other hand, I could imagine that you are this week already approached by utilities that they say, hey, Amir, let's cut a deal. Maybe you can deliver to us whatever, 500,000 pounds within the next 5 years, stuff like this. I can imagine that this happened already this week.
Well, the first part of your question about our company and Hobson, again, any company, any industry, if you take the time and you commit and your approach is a long-term approach and you have the right people, you have a better chance of building a real business. At UEC, we've been at this now approaching almost 17 years. When uranium was out of fashion, we were buying assets. When uranium had a challenging time in 2011, we were producing uranium. Our company is one of only few sort of developers today that's actually produced uranium. Okay, most companies have never produced uranium in their lives. And we embraced the downturn because we took a fundamental view that the market was going to eventually come around. We tripled the size of our resource base during the bear market for uranium that lasted a decade. We quadrupled the size of our fully permitted production capability, whereby today we're permitted and have the potential, baseline potential, to get up to 4 million pounds per year. 2 million of that comes from our Hobson plant that you just asked about, where that's our physical capacity there. And of course, we have room to grow. We have over 100 million pounds of uranium in the ground. And our company is the only company that has been preparing for production this year in the US, at least. I'll talk about the US. We have been actively drilling and developing our first production area at our Burke Hollow project in South Texas, which will be a satellite deposit that we mine uranium from using in-situ recovery, and we're going to feed that uranium for processing to the Hobson plant that you were asking about. January of this year, when the uranium price was at $30 per pound, we initiated production development drilling at our Burke Hollow project in South Texas, which will be a project that we will develop with in-situ recovery, which is a very low-cost and environmentally friendly way of mining uranium, and we'll ship that uranium for processing to our Hobson plant that you mentioned. We're one of the only few companies in the world that owns its own fully built, operational, and permitted uranium processing plant. And it's our South Texas hub and spoke strategy that really has a lot of production readiness in it. Our Palangana mine, which was already producing and it's on standby. Burke Hollow, which, as I mentioned, we're the only company in the United States that since the beginning of this year has been actively conducting development drilling. And in fact, the production area that we're developing at Burke Hollow is the largest new production area for in-situ recovery in the US. And so not only have we been preparing for this moment for the last 16, 17 years, but also really aggressively since the beginning of this year. And to your question about utilities, look, to be honest, I think the price has moved very fast here, such that while we are certainly engaging in discussions with utilities right now, such a fast move doesn't make the buyer immediately jump in. Now, they might, potentially panic and need to buy spot material because, as you know, when you need uranium, you need it, right? You can't shut down a nuclear power plant. But we will certainly look and have those discussions. As you know, we have individuals on our team like Scott Melby, who has really done contracting for the biggest companies in the world at Cameco, Uranium One, and Kazatomprom. So we have the people. We have the people that have the experience to look for uranium, permit uranium, produce uranium, and market and sell uranium. We also have, as you know, the former United States Energy Secretary as the chairman of our company. So we also understand policy and the political issues around uranium. So the utilities certainly will have to start thinking soon about contracting, about approaching companies like UEC, and there are many companies like us that have production capability. And the platform that we have, Johan, is really, it is the biggest platform in the US. We have more fully permitted uranium resources for in-situ recovery production in Texas and Wyoming than any other US-based producer. And that gives us the leadership position that we have been developing and building for all this time.
Absolutely. So you have not been yet contacted, maybe this is what I see from your answer, but that might occur soon. So the point.
Well, hold on a second. I didn't necessarily mean that. We may have had dinner with one actually just the other night. So there's contact, there's communication.
Okay, super. No, because I'm brought up the question because I got already phone calls the last 2 days from viewers, and they said, "Hey, when you talk to Amir, please ask him because this is for us something which is really key, because what they see is on the one, and I see it the same way. On the one hand, we have rising uranium prices driving the share prices. I mean, your share price appreciated what 50% the last 2 weeks. So fantastic. But on the other hand, we see when you go back into production, you are making money in addition to your investments, and you made already a book profit, I would say, between $40 and $50 million with your investment in physical uranium. Correct. So you are doing extremely well, right? And I know Heiko Ile has, I think, a price target on you like $6 or $7.
Listen, if he does, I think, but to come back to your point, we've done a number of things that has created leverage to the uranium price for our company and for our shareholders. Don't forget, we own 15 million shares in Uranium Royalty, the only uranium royalty company in the world. Those shares today trading at $5 and our average cost is $1. We have a $60 million unrealized gain for our company and shareholders in that investment. We have a very large unrealized gain, as you mentioned, in the physical uranium that we've acquired at low prices for our company. And in addition to that, we have the largest platform of permitted projects in the US for production. This portfolio, this platform is very strong. But I want everyone to remember one thing. And you and I may disagree on this, but at least you know I'm consistent about it. In the bear markets for uranium, there were uranium producers, if you recall, that had long-term contracts at 50. We didn't. And that's why we shut our production sooner. We didn't have contracts because we were, by design, 100% unhedged. And I believe in a new bull market for uranium, remaining 100% unhedged is important for shareholder exposure to the commodity price. In 2006, 2007, companies like Cameco were hedged at $40 per pound when the spot price moved to $140 per pound. And I'm not saying you stay unhedged forever, but if you hedge too soon, whether it's uranium or whether it's gold, you end up leaving a lot of potential upside on the table. And when you've been in an industry like we have been in uranium for such a long time, seeing this long bear market, you got to think about what kind of realized return you want to have longer term to really make up for all the time and energy that's gone into it. And so while right now, I would say to you, if a utility approached us right now and said, let's do a deal at $45, I want to lock that in, I wouldn't commit to that. I've heard other big producers have committed to lower prices and sign long-term contracts. That is, in a way, irresponsible, because if an investor wants to invest in uranium, they want maximum upside. If an investor just wants to lock in an 8% return, they can go invest in the real estate industry. Why are they investing in uranium? Again, long term, a producer has to do the responsible thing in terms of contracting, in terms of development, in terms of looking after all these issues. But I believe one reason someone would have always liked UEC would have been that we were 100% unhedged producer. Today, we are still, at this moment, 100% unhedged. We have to see how the uranium price develops. We have to make decisions along the way. This is all happening so fast, and it's exciting. But I'm excited about the fact that we have all these different ways of exposure to the uranium price. We're unhedged. We have our equity position in uranium royalty. We have our physical uranium. We have our permitted projects. And we're developing the next new uranium mine in the US, which is going to be the Burke Hollow project.
Fantastic. Last two questions. And I really mean it. Are you buying more physical uranium? And
I can't answer that.
Okay.
I can't answer that.
I tried it at least. Yeah.
I can answer this. We will, and any uranium we buy has always been U.S. warehoused. So our program has always been a very U.S. oriented program, number one. Number two, whatever we may have bought or whatever else we've done with our physical strategy, you got to wait till our next financials to see. But I'm very pleased with what we've done with our physical initiative. We have a gain in our physical initiative. And frankly, it's become a competitive advantage. No other company that's pre-production has contracted for so many pounds of uranium over time at fixed prices that are now almost $20 per pound below where we fixed them. And
exactly.
The price is $20 above where we fixed them, the other way around. Let's see.
Exactly. And what do you think might be the price at Christmas of uranium? Just a guess.
We had my Catherine, who you know, on our UEC team the other day sent me an email, and it was an interesting email. She said, "Hey, I thought you might want to see this." And it was on January 1st, we had at our internal UEC team, we did our poll, our uranium price prediction poll, where every single person had to predict the price by December 31st. And she wrote it all down. And then, we were going to give someone like a $10 gift certificate at the end of the year. All of us are just having a fun prediction test. And I'm not kidding you. I looked at that and I couldn't stop laughing. My prediction on January 1st for December 31st, and I have Catherine's email to prove it to you, was $140 per pound. Now today, maybe that was January 1st, and I was just trying to set a big goal for myself for the end of the year, right? But I just think the reason why I have so much conviction in this. Look, the reason why, as you know, this has not been an easy industry to be in for a long time. If you were in this industry, when you and I would go meet with investors who this sector was hated for so long, the only way you could have survived and made progress was if you had so much conviction. And my conviction has always been around supply-demand fundamentals. How on earth can this commodity price not move up when we every year in and year out, have been consuming more than what we produce? Supplies are going down, inventories are going down, and marginal cost of production is twice what it was trading at, right? So I didn't know when that trigger was going to be, but I've always had incredible conviction in the fact that this is not an if question, it's a when question. And look, we just witnessed it. When it does happen and when you get that breakout, it happens so fast that it's difficult to get a seat at the table. That's why you have to build your position in advance. That's why you have to buy your projects, your pounds, all those things. That's why we did that. Right now, can you imagine right now if you're a new uranium company going out there and trying to buy a uranium property? Everything is
super expensive.
You can't do it. So there was a window, there was an opportunity during a long bear market to do certain things. And I look back and say, you know what? We took maximum advantage of everything. We bought royalties, we bought physical, we bought projects, we built a big portfolio of assets that are all uranium related. And we have our thesis. You either agree with it or not, but we have it, we express it, we execute it, and we keep executing it.
Perfect. I love it. That was a great final sentence. Keep executing. That's exactly what we expect from you guys. Uranium market is there. The outbreak is there from the price wise. And things look great. And finally, we are rewarded for our long patience, I would say. Amir, thank you very much. All the best to you. And hope to see you soon. Probably not this year, but hopefully latest at PDAC next year, because traveling still is a nightmare here in Europe and things are shaking up a little bit. And stay safe and healthy. All the best to you.
Thank you. You as well.
Thank you. Yeah, ladies and gentlemen, that was Amir Adnani, the CEO of Uranium Energy, and you heard it. He's the trendsetter. He was the first one as a company buying physical uranium months ago, and he did extremely fine with that. He has already a book profit around $45 million on his position. The company is doing extremely well. They are in a position where they can restart quite fast their Hobson plant to really produce US uranium. That is also important. And with ISR, this is very cost efficient, environmental friendly. So all the ingredients there for much higher share price. And as far as I remember, H.C. Wainwright has already a $6 to $7 target on the stock price. Today, they are trading around 330 to 350. So still a good 100% to go on those price targets. But to be honest, if uranium goes to $100 or above, I see this stock in the double digits. So time to get into that, time to really consider UEC as a great investment with a great management. Thanks for watching us. Bye-bye from Austria.